You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-compelling, ever-expanding Options Insider Radio Network. Once again, if you haven't checked out the latest editions, make sure you run, don't walk to check those out, including Trading Tech Talk, where we break down all the intricacies around HFT and Flash Boys and all that other fun stuff. If you're up in arms about that stuff, or you just want to learn a little bit more, Trading Tech Talk is the program for you. And we also have, of course, Options Playbook Radio. Check out that one as well. A lot of great new additions to the network and more coming all the time. And while you're there, of course, check out our Options Insider Radio Network mobile app. You can stream all 300 plus of the episodes of the Option Block now, as well as download them for offline listening. And of course, listen to all the other programs on the network. And while you're doing that, hit that @ symbol, that email symbol, that feedback button, and you can shoot your questions, your comments, your insights directly off to the hosts of your favorite programs. And maybe if they're interesting, we'll even read them here on the air. So a lot of great stuff for you guys to check out in that Options Insider Radio Network mobile app. Look for it in your iOS, Android, or even the Amazon app stores. All right, and joining me on the old all-star panel today, starting off with the man holding down the Options Express hot seat, none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Jacobson, welcome back to the program, sir.
Yeah, thanks, Mark. It's really good to be back. I was off on this Thursday show, for which I apologize. But today was a real interesting day because today's the first day in a couple of weeks we didn't have any rotation. It wasn't that part of the market was up and part of the market was down. Today was really interesting. The Russell got big trade lift today, as did the biotechs and techs, which had been really out of favor. I mean, they were the thing that people were rotating out of. But today, growth went up, momentum went up, blue chips went up. It was a good day all around. Volume was good. And the only thing that really had red lights in front of it today was the VIX.
And that sound of frenzied typing in the background, listeners, means we can only be joined by one person. That is the greasy meatball himself, Mr. Mark Sebastian from Swan Wealth Advisors and OptionPit.com. Mr. Sebastian, welcome back to the program, sir.
Hi, how you doing? How's the world treating you?
The world is treating me pretty good. How about you?
Oh, it doesn't get any better than this.
That's true. It
Living
really
the
does
dream,
not.
my friend. Living the dream.
Whenever you're on the old network, you are indeed living the dream. We will be joined fashionably late, as usual, by Uncle Mike Tosaw, but for now, we're going to keep on rolling right on into our first segment, the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, you know what time it is. It is time for the Trading Block, the portion of the show where we break down what's hot, what's lighting up the old tape, what's moving in the old markets, with a particular focus on the options component of those markets. And all you guys always writing in, what's the date? Well, we are recording this on Monday, May 12th. So bear that in mind, listeners, when you're playing the home game. And as we are recording this, as Alex mentioned, it was an interesting day. It wasn't one of those mixed sessions like we've seen of late. It really was a strong surge to the upside. The S&P is closing up a full percentage point, or 18 handles, to close at just a hair below 1900 there. The Dow up nearly a full percentage point as well, about 3/4 of a percentage point, or over 100 handles. But as Alex alluded to, Russell leading the charge, up nearly 2%, about 1 3/4% on the day. So a lot of action out there across the board. We don't usually talk about Russell a lot on this show, so it's interesting to see Russell getting a little bit of play in the old broad markets today. And as Alex mentioned as well, of course, with everything rallying, VIX cash taking it on the chin, down nearly a point, about 3/4 of a point or so, to about the 12 handle. Mr. Sebastian, like I mentioned, we don't really talk about Russell a lot here on the show. Doesn't get a lot of play in the broad market stuff. Do you guys watch it a lot over there at Option Pit with your Pit Report? And are a lot of your clients active or interested in the Russell?
Yeah, well, I mean, I think more and more. With the complete decimation of VIX, anybody who's got a premium for or who's got an appetite for premium, or a premium appetite, either or, they've got to be looking at the Russell and the Nasdaq as the only place where you can actually play in something where there's some risk priced in, and that's why people are looking at the RUT. It is becoming more and more active, and it's a really interesting index. So it had absolutely been the complete laggard. It was below its 200-day moving average for a little bit, below 1100 for a little bit. Kind of a booming day today, but the last couple months, as goes the Russell, so goes the market, and the Russell was up nicely today.
Yeah, Russell certainly leading the charge today. Russell also a big player from an options perspective. Of course, you mentioned RUT, IWM, another big options player, day in, day out. We've been talking a lot on our Volatility Views program about the new Russell volatility product. Of course, the RVX. Still waiting for that one to catch fire. Of course, it still is very early days, only a few months into the lifespan of that product. Saw some decent open interest in the first few months of the year, January into February. Then it seemed like that trailed off a bit after February expiration. It'll be interesting to see if this rally in the Russell will translate into some volatility options action as well out there in good old RVX. Alex, you of course touched on some of the things you saw. What else was catching your eye and lighting up the old tape over there at OX today?
It was just an across-the-board rally. It was, in some ways, refreshing because there have been rotational rallies. The blue chips would go up, and the money would come out of Amazon, it would come out of Priceline, and it would come out of the biotechs. Today, it's just across the board. Everything was up. Some of the names that, as Mark mentioned, some of the names that had been out of favor, the big Russell names, the big NASDAQ names, those were rally mode today. So it was a good day overall. And as I said, the only red I had on my screen, three things I look at were down today. Berkshire, which kind of has had a little rough sledding since the last meeting last weekend. Herbalife, which that starts fights as soon as you bring the name up. And the VIX, but the stuff that was up today, all the traditional, option player names where when they go down, they buy stuff, customers will buy stuff $15, $20 out of the money for $1, hoping for a recovery day like today. They got it. I mean, Intuitive Surgicals, as I said, the Amazons, the Pricelines, they all popped today. And we have a large cadre of customers that are premium harvesters, and the IWM took out the 110 level, and there was a fair amount of premium written at that 110 level. That was, a couple of weeks ago, that was a fair amount out of the money, and it took out 110, and I know that probably made a lot of people nervous, but we ended the day back up into, the mid 112 area, so the 110s are back out of the money. The other thing was the VIX this morning. The VIX took out 12 this morning, which is kind of surprising because, they haven't been able to kill the VIX. They haven't been able to kill the VIX. We've had rally days, and it seemed to hold that 13 level. Today it took out 12, although it traded back up over 12. But they're definitely taking some of the premium out of the VIX.
All right, listeners, and we are also joined fashionably late, as usual, by Mr. Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, and usually you can come on here and beat your chest about how great Apple is doing, but today Apple rallied and pretty much the whole market followed suit, so you are no longer alone in the catbird seat, sir.
Well, everyone saw Apple going up a percentage, and they made a deal with all of us Apple people. Say, you know what, can the rest of us have some up day too? And we said okay today. But so long as Apple was ahead of the S&P today, which it was by a little bit, we figured we'd give the Russell a little bit of a fun day today. So that's what we talked about at the Secret Society of Apple Lovers today.
Is that in between the debates about whether or not to buy Beats headphones and Beats audio?
Oh, we did. That's not even part of the conversation. We just want to mess with the price just for all of you other people out in the world.
I mean, the question isn't whether to buy Beats. It's how many Beats headphones to buy, whether you should wait in line for the next week and a half for the next set of Beats headphones, only to see Samsung come out with a better headphone that costs less and is but isn't as cool. So it's just a matter. That'll be interesting. The one positive is out of this whole Beats thing, Mike, is I was saying to myself yesterday, I wish Dr. Dre was richer. And, mission accomplished.
Does that keep you up at night? His lack of obnoxious wealth?
Exactly.
Well, you know what? Today I got to say it was a good day, as his friend Ice Cube would say.
Yeah, no, I mean, I think, I think he's living, he's a happy camper. Let's just put it that way.
Well, they're letting him ride. That's the thing.
Absolutely.
Aside from all your Apple love, what else was lighting up the old BBI over there at RCM today?
Everything is. And right now we're at we've probably talked about this already. I'll say it again, as I like to say it days like today. Never in the history of the entire market has there been a better time to sell your SPY position than today. So take heed, take caution. Not necessarily bearish by any means, but with a 12 VIX and with the market at all-time highs, having some type of protection in place might not be a bad idea, folks.
Now, Mike, we started off the trading block, talking about Russell getting some love in the trading block for a change. I don't really talk about Russell too much here on the show. I know you're a pretty dyed-in-the-wool SPY guy. That's your go-to option, pun intended. Do you play at all with the Russell? Do you have any clients that are interested, maybe RUT or IWM or any of those ancillary Russell products, or do you just kind of watch it as an indicator?
Watching it as an indicator at this point. Have done some trades in the Russell throughout the last couple of years, but at this point, pretty much 100% in SPY for where we're at right now, just from the standpoint that Russell's just been too darn choppy lately, and it leads to very high BBIs at times when we're in things like what the Russell has been over the course of the last couple months.
Well said, sir. All right, and with that, I think we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, that funky tune means it's time once again for the Odd Block, the portion of the show we break down the weird, the unusual, the downright bizarre goings on out there in Options Town. Going to kick things off with a name that we've talked about a few times here on the old Odd Block. In fact, we just discussed it on the show last week. This would be Denderon Corporation, one of our favorite sub-$5 biotechs. In particular, this one closing today, $2.06, as we discussed on the last show. This name having a bit of a rough time over the past week or so. They had earnings last week, and I believe the numbers beat the street estimates, but it turns out they were lacking in some of the other guidance areas, and that always crushes the stock. Going into the earnings, they had taken a bit of a beating too. They were trading around $3 not that long ago, about 2 weeks ago, and now trading right around $2, so down about a third over the past couple of weeks. So not a good time to be long a ton of Denderon. And what we saw today was someone perhaps looking to extend his short position out here in DNDN. Again, this is the name that does about 5,000 contracts a day, doing about 22,000 today. And the lion's share of this coming in some relatively deep in the money combos. Someone was rolling on the four handle to the tune of 4,000 contracts. We saw essentially the May AUG 4 roll going up 4,000 times. So listeners, do the math. That's 16,000 contracts. What looks like we saw a lot of closing on the May side. There was 11,000 contracts open on the May call side, but less than 1,000 out there on the AUG side. So it looks like at least the trader paid about 13 cents. He wants to get long back in May, close out the May, and roll that short, or that synthetic short, I should say, out to August. Again, this is the name. Been seeing some heavy short interest of late. This is a trader probably taking advantage of that to roll that short exposure. Given everything we've seen in Denderon of late, not surprising. Probably going to see a bit of a challenge, a struggle to get short some shares out there. This guy taking advantage of the options to do that. Mr. Sebastian, this one has all the hallmarks of a great odd block trade. It has a ton of volume and, of course, a cheapy biotech stock. Two of our favorite things here in the old odd block. What's your take here on this roll in Denderon?
Well, probably just someone moving around a position, trying to manage something, or potentially some sort of stock borrow play. You know, one of the things to remember is these biotechs are, they're pretty crazy. And Denderon, that one has, I mean, if you think Netflix was the widowmaker, Netflix is nothing compared to Denderon. I mean, it's not even close to what that's done to people. I mean, do you remember that thing? I think there was a 1 month period where it was up and down something like 80% on like 2 or 3 different days. I don't know if you remember that.
I've only been watching it for about the past 6 months or so, since a listener wrote in about them a while back and was asking about, I believe,
this is from like
Flies.
06.
Oh yeah, so that was before my Denderon time, but I've been watching them pretty aggressively since that listener wrote in, looking at it. I believe it was a question about time flies, moving the guts out and keeping the wings near term or vice versa. That's what raised my first inkling of them, but you're right, they've been pretty wild since then. Getting cut a third in the past week or two certainly rivals the heydays of the Netflix widowmaker. We'll see if this keeps up. Interesting to see this guy's short the 4 strike, not adjusting that at all. He's keeping it at the 4 handle, which just shows this thing was trading $3 like a week ago. So that wasn't that outlandish a week ago. And now it seems crazy to be short essentially double the price of the stock here. But we'll see. Interesting stuff. We'll keep an eye on this one. This, of course, probably, I would wager, going to be popping up again in the odd block sometime soon. This is just too juicy of a name to really stay out of the odd block for long. All right, moving on now to another one. I don't believe we've ever featured this particular name in the old odd block before. This is VeriFone Systems Inc., ticker symbol PAY, P-A-Y, closing today about $35, just a hair shy of $35. This is the name that does about 3,500 contracts a day, doing a whopping 26,000 today. This is a bit of a twist on what we normally see in our typical odd block play, where someone comes in and trades a bunch of upside calls. In particular, we saw a bunch of the May 35s going up to the tune of nearly 9,000. When we profiled it, it was about 8,000 on the site. Another 1,000 or so went up since then for prices in the range of about a quarter to 45 cents. It was scattered buying throughout most of the day. No real appreciable open interest, only about 1,700 contracts. Again, this guy lifting up the IV on this strike, so clearly coming in to gobble up some, actually not really upside. These are at the money calls now. But what's interesting too is if you look, we didn't profile this at the trade because it went up after the fact, but it does look like they are perhaps rolling here on from the 30s, where we saw about 7,300 going up there as well on open interest of 8,500 contracts. Seems like someone doing the old up and not really out, just up roll here. Usually you see this kind of thing and you usually add a few months to the expiration chart, but so far today, not exactly the case. May qualify as a love your broker trade because we don't usually see them, like we said, in the same expiration month. Maybe there's a reason this customer wants to stay so glued to May. May going the way of the dodo pretty soon. Not sure why he wants to add 5 handles, but c'est la vie. Interesting stuff. That's why we call it the odd block, listeners, because people do some odd stuff. Next up, a name we haven't talked about in quite a while. This is Hillshire Brands Corporation, ticker symbol HSH, closing today about 35 3/4, down about $1 and change or 3%. This is the name that does about a little bit sub 1,000 contracts a day, doing a whopping 44,000 today. And what we profiled here was a trade going up out here in July, in particular the July 36s. When we wrote it up on the site this morning, we saw 1,000 of these July 36s going up for about 80 cents. These were opening buys, only about 100 contracts open on that strike. By the end of the day, we saw about 4,000 going up in total, most of those, again, being buys on scattered volume, to the total of 4,200 contracts going up on that strike. But of course, like we said, there's a ton of volume going up out here today. The 37s went up in July 4,000 times. 38s went up about 2,000 times, as well as a ton of paper in June and a ton of paper in May. So it really was a paper explosion across the board. In fact, if you want to see where the lion's share of the volume went up today that we didn't have a chance to profile on the site, that was indeed looking all the way out to October. The October 38s going up 10,000, nearly 11,000 times here today on open interest of about 5,700 contracts. So a lot of paper lighting up the tape out here in Hillshire Brands. I know we talked about this before, Mark. Is this one you guys play around with out there at the pit? Is this something your clients are active in? Certainly was a pretty active options name today.
Yeah, I mean, no, but they're involved in some big deal for PF, like some food company. So, what these guys do is they make, Hillshire Farms, they do all kinds of other stuff. And, anytime you have a deal stock, the paper starts to get interesting. And that's what we're looking at today. This is a deal stock.
Indeed, deals make the odd block a very fun place because they tend to drive a lot of fun volume in names like this that otherwise maybe wouldn't be lighting up our tape on a daily basis. And speaking of lighting up our tape on a daily basis, we're going to close out here with WisdomTree India Earnings. Seems like a quarter can't go by where we can't mention this one, of course. Ticker symbol EPI, closing today at $20.52, up about 4% or so on the day. This is the name that does about 10,000 contracts, so again, pretty aggressive from an odd block perspective, doing about 54,000 today. So a lot of paper lighting up the tape. In particular, what we profiled here on the old website, and again, you can find all this on the optionsinsider.com/unusual activity if you want to read all these alerts in a lot more detail, as well as all the ones we don't have time to get to here on the show, listeners. But on the site today, we did profile one sizable put spread that went up out here in June. The June 2017 put spread, to be precise, went up about 10,000 times. So do the math, listeners. 20,000 of that 50,000 contracts going up in one sizable put spread here. Went up in essentially 2 blocks. They hit the bid on the 20s, and then they bought the 17. So they were selling that spread. Looks like it may be bullish. Again, no open interest to speak of on those June 20 puts, but a ton, 60,000 contracts on the 17. So there could perhaps be a roll of some strikes here as well. Another trade we didn't get a chance to profile on the site, but it looks like it may indeed be related, is the June 20s going up today as well, to the tune of 13,000 times for scattered prices there on open interest of 17,000 contracts. So this could have been using a puts to finance another trade. It could have been a lot of interesting things. Could have been a combo with a put kicker. A lot of interesting ways that this trade could have gone up. Senior Sebastian, take us home with this funky, looks like 3-way here in WisdomTree India Earnings.
Well, why wouldn't you want to be in WisdomTree India Earnings? It looks like it's, well, you've got the put spread trading, and looks like some sort of sale, and then kind of, or like a roll up. So probably just somebody trying to create a little income off of a stock hitting its fit to a high. So that's it.
Well, that is indeed it for WisdomTree. That's also all she wrote for the Odd Block. But now it's time to keep on rolling right on into our next segment, the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It is many of your favorite parts of the show because it is the time for the Viceroy to don his fanciest of fancy hats and take us on his behind-the-scenes VIP tour into the land known as Options Express by Charles Schwab. Mr. Viceroy, whither shall you lead us today, sir?
I'm going to do sort of a general conversation about the expanded use of mobile apps. And last week we teased a bit of the single leg walk limit coming to Schwab Mobile, and kind of an interesting statistic that we're seeing, and that's the fact that on days, I want to frame this correctly, but on days when markets would generally be quieter, trading volumes would be lower. The expansion of mobile apps means that there seems to be less fall off on those days. Now, kind of the classic conversation is, nobody trades on Thanksgiving except the Forex people, because they've got the reason to leave the table and not chat with their, mother-in-law, because they can claim to have an urgent trade on. But the expansion of products to mobile apps is proving to be just a boon to customers. It's the amount of engagement customers get now from mobile apps and from the ability to see research, and mobile apps, our blogs here, and many of the pieces we put out during the day. The level of engagement, the level of use of those people. I mean, you're literally seeing user numbers go up by 4 digits a month, which is amazing engagement. Just amazing engagement. I was at a fundraiser this weekend, and all the fundraisers I go to are SIBO, CME people, and one of the conversations was, and I think this is a testament to you, Mark, the fact that many of the financial podcasts now have more viewers than CNBC has during the day, which just astounded me when I heard that statistic, that more folks are coming into things like Family of Option Insider casts than are tuning into CNBC during the day. And the mobile device has now become a quote device, a news device, and it's delivering research, which is changing the playing field. So I just thought I'd take a minute and talk about that. We've talked about the market today. It was up across the board, and it was a good day overall. But little commentary about the engagement of clients with mobile.
Just staying on that mobile tip for a second there, Alex, one of the refrains I've always heard from the brokers, and it seems kind of dated now, but I've still heard this a lot, and I'd be curious to get your input on it, is that mobile is great for people coming in. They want to check their quotes. They want to do some basic position management. They want to come in and check their balances and things like that. But the old refrain was that they're not going to use it for complex stuff. They're not going to use it to leg iron condors. They're not going to use it to do a lot of sophisticated type trading. Are you guys seeing that play out on your system? Are you seeing people coming in and using the iPad app or the regular mobile app and doing some what would otherwise be relatively sophisticated type trading through that? Or is it still pretty much to come in, do a quick check, and then check back in later through the website to do the more sophisticated stuff?
So a year ago, it was a quote device. Today, it's a trading device. And the fact that things like walk limit and multi-leg tickets are going onto the mobile devices, people are trading from them because I mean, we generate statistics internally, and I was in a meeting at 2:00 just before the podcast. This is one of the things we talk about. People have embraced it. I would have agreed 2 or 3 years ago that it was, I can see what's going on, but I'm really going to run to the desktop. That's not the case anymore. And that may be the people embracing and the traction that some of the bigger tablets have and some of the bigger phones have, but they're becoming trading tools now. And it's interesting because if you look at kind of a traditional news source, which was CNBC, Fox News, Bloomberg to a lesser degree, I'm not saying that people, aren't watching CNBC, but there are many other vehicles now that have greater viewership, and that amazes me. And a lot of that is driven by podcasting. It's just an astounding statistic. And when I heard it this weekend, we talk all the time about the fact that a couple 100,000, views will come to the Options Insider. Those are huge numbers today. And people are really consuming things now the way they want. And one of the ways they want is on a mobile device.
Yeah, I certainly can't argue with that trend. We've certainly been around for a while now with the on-demand audio, the podcast stuff. We launched quite literally the first Options podcast way back in January of 2007. We've been able to watch the medium evolve and us and the network evolve along with it. And it certainly is a much easier conversation to go up to someone today and say, check out our podcast, than it was back pre-iPhone when no one knew what the hell we were actually talking about. So this certainly has been a welcome evolution for us to see, and certainly glad to see also that the OX clientele is really embracing some of that advanced stuff on the mobile platform because, hey, a lot of them are not at their desks all day. They have actual jobs and they only have access to their mobile devices. So glad to see that they're taking advantage of it. All right, good stuff, Mr. Viceroy, as usual. Now we're going to keep on rolling right on into the next segment because it is time for some strategery. Yes, that's right. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, welcome to the Strategy Block. I know we threw you off a little bit. We kind of changed the schedule up a little bit the last few weeks, and we were doing strategy blocks on different days and mail blocks on different days. We're going to try to get back to that regular schedule so you guys know what to expect when you're tuning into the old program. And that means Monday is strategy block day, and Uncle Mike, it is now your turn, sir, to don whatever you like. Could be a smoking jacket, could be a fancy cap, perhaps the old bubble pipe. I know that's a big favorite of yours. And then proceed to dispense some options, wit, and or wisdom. Perhaps you want to sprinkle in a little bit of hilarity on the top there as a cherry. I wouldn't hold it against you. So what do you have in store for our listeners today, Mr. Uncle Mike?
Well, I think today's a day that I want to talk about what to do if a covered call goes in the money, because I'm sure that's what a lot of people are having happen to them today. But before, I just kind of want to expand a little bit on what Alex was talking about in terms of the mobile devices. If I was just trading my own account, I would probably be a mobile phone junkie, and I would be doing everything on my mobile phone. But one thing, it's right now, and I'm sure Mark can probably add a little bit to this too, is that it's a difficult pill to swallow of doing a 400 lot on SPX or something like that when you're doing it on a mobile device. I'm not mentally ready for that.
Yeah, that's never going to happen. I mean, until markets get so tight that DMA is the same as calling somebody up, which I find probably hard to believe that will ever happen. But until then, yeah, I mean, there's just no way. No way
So
I would sling 400.
I would shock you guys. It happens all the time now.
Well, just because it happens doesn't mean it should. It's kind of like it's kind of like creating velociraptors.
Well, I think with me, it's kind of one of those things to where my thought on is right now, I'm not mentally ready for it just because we do a lot of separately managed accounts, and there isn't an app for that works efficiently yet with anyone with whom we work with. So along those lines, we're not ready for it from that standpoint. But even if it's kind of one of those things that I kind of feel like as a trader, I'm where maybe the retail client was a few years ago, and that right now I use my phone for a quoting device. If I go out and get the mail, or if I go get some water in the office or something like that, my phone is with me. And if the market does something that I don't like or whatever, then I naturally just rush back to my desktop. But at some point, I would think that maybe we will get to that level. I'm not sure, but I don't know. But nonetheless, I'm not there right now. And if there is a phone app that can do that at some point with separately managed accounts, I'd be interested to see it, but I don't know if I'd be ready to do it just yet.
Yeah, I don't know about an app for separately managed accounts, and obviously Schwab has a big business there, but I don't interact with that. But the amount of people trading 50s, 100s, 2, 3-legged buy rights, it is a little more active in exiting than it is entering, because exiting obviously can, under some circumstances, be a little more time urgent. But on a day like today, if you looked at, let's call them the top 4 e-commerce brokers, probably 10 to 15% of our trades are done on mobile, and that represents a multiple of that in terms of volume. So I can tell you it's more than 10 or 15% of the volume. And the thing is, people who embrace it. I think one of the barriers is trust. And I'm not talking about trusting the firm. It's trusting the quality of the connection. And to Mark's point, you're someone who's, a lawyer, a doctor, someone who's got a busy day and may not have immediate access to the desktop. And all of a sudden you want to roll something or move something, and you literally step away from what you're doing and your mobile device, and you make the trade. And it's astounding, the engagement. Wouldn't surprise me if, and as phones get bigger and as tablets become more and more prevalent, and connectivity gets better, that it'll be 30% of the e-commerce volume inside of 12 to 18 months.
Well, Alex, but there's something that a mobile phone has that can be just as useful for trading and also allow you to step away and make a trade quickly. And it's called the ability to call somebody. And it's always shocking that, so if I was slinging that kind of size, I mean, what is the speed differential between me picking up and calling your desk and saying, hey, Alex, I need you to sell 1,200 of these calls I'm long, versus pressing the button? And, what is the slippage between me having a professional such as yourself or John or Mike or myself trade it versus clicking the button in the mobile phone, where there's got to be some sort of trade-off there, right?
You can make the same argument for the desktop versus that too.
Yeah, but you're asking the wrong question, because here at OX, we don't charge for you to call the desk, so there's no reluctance to call the desk. So, is there a charge to walk out and pick up the phone? Yeah, for many people there is. There are also people, and Mike can tell you about this, who simply don't want to talk to the desk. It doesn't have to make sense. They simply don't want to do it. I mean, we'll get service requests.
Actually, I could understand not wanting to talk to you guys. Sorry, just bad joke. Anyway, keep going.
So we'll get service requests. I moderate our OX Social, which is our community. And there are people that will ask questions of other folks on OX Social. And sometimes the simplest answer is call a help desk. There's an easy solution for that. Talk to the help desk. But people simply don't want to do it. I mean, some people embrace it. Some people don't. But are there people trading, 20 condors on a mobile device? Yep, like candy. I mean, like candy. And that, in fact, may be part of the issue. It creates access. I mean, think of the evolution, right? You went from telebroker to internet trading to now mobile trading. And at each step, there were people who wouldn't embrace it, who slowed down, who just wouldn't do it. But there are people who flip those calendar pages over and say, hey, look, it's May of 2014, and, I can step out of a meeting with my tablet or my phone and roll out of this, Russell put spread today on the move back over 112, and I want to get out. And I get out instantly on my mobile device.
Uncle Mike, we didn't mean to hijack your segment here with all this talk of mobile. But if you want to dive into some strategy, sir, the floor is yours.
Do that. We can save this. We can definitely come back to this conversation another day because it's very interesting. But nonetheless, today I'm sure there were a lot of people out there that were getting some covered calls going in the money on various stocks that they owned. And oftentimes, I get, whenever I say this, sometimes I've actually gotten calls from clients saying, how can you say this? But nonetheless, it's all in good fun. Folks, if the covered call goes in the money, it's a good thing. That's the first thing that I want to mention, just because of the fact that a lot of people get upset about that when your covered call goes in the money, because of the fact that you feel that you want to be exactly where your short strike price is, and you want that ingenious feeling of being totally right on everything with which you do. Folks, that's called perfectionism trading, and it's really not a good thing in a lot of cases because it can get you into trouble. So the first thing that needs to be emphasized is if your covered call goes in the money, it is a good thing. Now, there's a couple of ways with which you can handle this situation. We've talked about them on the show before, but definitely want to mention it again today because I'm sure a lot of people, just depending on what stock you're in, there's a very good chance that we have a lot of listeners that are in this situation right now. Should your covered call go in the money, choice one is just say, okay, who cares? I'm going to let this covered call get called away. The other reason I bring this up, it is an expiration week for the monthly. I understand pretty much every week's an expiration week these days with the weeklies, but nonetheless, this is a monthly expiration week, so people trading monthlies may be in this situation right now. Let's say that you decide to go that route, just let the stock get called away. Nothing wrong with that. When that happens, what you need to do is just have a plan for when you're going to get back into it, and whether you're going to sell a put to get back into it, whether you're going to perhaps look for another stock. Just have some type of way with which you're going to put that money to use now that it's going to be in cash again in another few days. Now, here's another thing with which you can do, and I know Mark likes this strategy, and I'll go back to my double chicken wing analogy from wrestling. I had a wrestling coach that said the best way to get out of a double chicken wing is to not get into it in the first place. And so if you're concerned about the stock getting called away that much, then one thing with which you can do is instead of selling a covered call against the stock, sell a call spread. So that way you know that you're still getting some income just like you would a covered call. However, if the stock does go to high heaven, if it goes up 20, 30%, and you're wrong about selling that call, you sold a call spread. And you have some type of upside still in that stock. You're just going to miss out from 52.50 to 55 or from 60 to 65, wherever you sold that call spread. So with that, that's another way with which you can do it. Now, the old up and out roll, you can do that at times, but I would advise using that sparingly, and I would also advise using that before the stock gets this close to the short strike price for a couple of reasons. Let's assume that volatility goes down as stocks go up. The up and out roll, by the way, is when you buy to close the current month or current week call with which you're in, and then sell a call 2 or 3 weeks further out or 2 or 3 months further out at a similar price. It's difficult to do as the stocks go higher if indeed implied volatility goes lower, because premium is going to be at a lower level. So with that in mind, A lot of times that will work better if you set your target point to where, let's say the stock's at 50 and you sell the 55 call. Maybe when the stock gets up to 53, at that point, you need to perhaps look at it. So with that in mind, if you're going to be doing something along those lines, perhaps do it a little bit earlier and not wait till the last minute. Oftentimes, if I'm in a covered call and it does go in the money, most of the time, my plan is to either let it get called away and simply sell another put the next month, or look for something new. So with that, as always, with any strategy block, have a plan before you get into the trade in the first place. That is the strategy for today.
I couldn't agree with you more there, Uncle Mike. It seems like no matter what show we touch on covered calls on, or what capacity we discuss them in, or whether we write something up on the site about it, whatever the case may be, whenever we touch on this strategy, people just inundate us with that same complaint. What happens if my stock gets called away? They freak out about that completely irrationally. And then when you go back to them with all the things you just mentioned, maybe spreads or rolls, then they freak out about it's going to cost me some of my income to do that. And I say, well, then what are you doing this for? If you can't handle the stock getting called away and you don't want to adjust, then why are you getting into this strategy? But it seems like people are fixated on covered calls, yet they cannot, for the life of them, wrap their heads around having their stock get called away. And trying to explain to them all these things you just did and how that might not be the worst thing that could ever happen to them, it doesn't matter. They just can't wrap their heads around it. Crazy stuff. But well done, Uncle Mike. Another valiant effort at trying to dispel all the madness around covered calls. And speaking of madness, it's time for us to roll on into our final segment. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, this is, of course, the portion of the show where we tell you what we're watching, what we're keeping an eye on for the rest of this week, at least until the next time the all-star panel gathers around the old microphone on Thursday. We have some economic reports coming out all on the inflation side. We have retail sales, PPI on Wednesday, CPI on Thursday. Have a few earnings still in the old hopper as well. Uncle Mike's favorite, his Waterloo, his Vietnam, none other than Cisco itself, reporting on the 14th after the close. COSI, our favorite little $1 option as a stock type name, close it reporting on the 15th after the close as well. And Take-Two, pretty active in the gaming side. I know Andrew likes to watch a lot of those names. Take-Two reporting tomorrow after the bell, that is the 13th. So a few names still to watch. Earnings season isn't done yet. All right, and Uncle Mike, what are you watching for the rest of this week?
I know I'm going to sound shocking right now to all of our listeners and all of my co-hosts, but we're right at record levels right now in the S&P, and want to see if we can break that 1900 mark and just see where we go from there. We did not break 1900 today, but we're ever so close. And tomorrow I'm going to get the old popcorn out. I'm going to cuddle by the fire and just watch the entertainment and the fascination that exists with this market. Can hardly wait.
It's about 1,000 degrees in the studio right now, so you mentioning cuddling by the fire, I just melted a little bit more here as we're talking. I can't even handle that image in my head. It's so hot here. All right.
Payback for all those Apple earnings jokes you played on me.
That's true. I probably am owed a few in that department. Mr. Jacobson, save me here. What are you watching for the rest of this week?
VIX. I think more than anything, it's the real cursor into the market. I agree with Mike that 1900 on the S&P is going to be a big emotional point, but I think we're going to power through it. I think VIX will continue to go lower. It's finally breaking down here. But having said that, I'll repeat something I say every time, and that's in 40 years of market experience, every major market event in my lifetime has come off what, in hindsight, was the low VIX for the cycle. So the 87 market event, the 89 market event, simulated VIX in the early 80s. So this market's going to do something here. And if volatility continues to come in, VIX takes out 10, I would own some wings on both sides of the market. I would own some out of the money call premium. I would own some out of the money put premium. This is getting to be a real interesting market from a trading standpoint and an observer's standpoint. New highs every day, lots of opportunities. Whenever it starts to look easy, I get very, very nervous, and I'm getting a little nervous here. So looking at VIX.
Alex, as an advocate now for buying premium, you know that Don Schlesinger just wrote you off his holiday card list. As long as you're okay with that, then I think we'll be good.
Yeah, but Bob Krause and I are still friends. So.
There you go. All right. Mr. Sebastian, when you're not busy constructing overlays and rolling all those downside puts, what are you keeping an eye on for the rest of this week?
You know, I'm with Alex. You know, at a certain point, things start to look, you know, it becomes less difficult to pay for premium. Although, you know, the old saying is it's really easy to sell premium when it's really easy to sell premium. Right now, it's really easy to sell premium. So, you know, we're still working on Swan Re. We've got Option Pit has their check coming out. So lots of fun stuff going on. I'm going to be speaking to some group of college kids for SIBO next week, which should be kind of fun. I enjoy hanging out with the college people. And I believe there's a really cool party on the 14th that I might go to.
Yes. Since Mr. Sebastian jumped us into the plug block, he's right. There is a big Options Alliance gathering on the 14th. So if you're in Chicago and you're in the options biz, come join us there Wednesday the 14th at the Buckingham Athletic Facility, 5:30 to 7:30. Should be an interesting gathering of options professionals and a lot of entrepreneurs in the options space, which I always think is pretty interesting. That's where a lot of the dynamic stuff is really happening in the options space right now. Speaking of dynamic stuff happening, Mr. Alex, what's happening over there at OX?
So live event, the remaining May live event, May 31st in Philadelphia, Jimmy Rouzan and his crew. Jimmy was in New York this weekend and had great numbers. He was in Schaumburg a couple of weeks ago, and the only reason I'm bringing that up is it was standing room. If you can't make one of the live events, they're simulcast on the site, so you can participate virtually. And the great thing about virtual participation is you can ask questions, you can interact with the team. So it's kind of like being in Philadelphia without being in Philadelphia. Not that Philadelphia isn't a great town. It is one of the best restaurant towns of all my travels. And I think I'm an authority on eating. I can visibly demonstrate that. One other event, that should have got a better laugh, but
no,
one other event.
We're all being very polite here, Alex. That's
We're not just, wow.
We're not a polite crowd. So one event, as long as we're talking about the 14th, May 14th, Nina's doing a covered call presentation on the application of covered calls in IRAs, and I think Mike's insight into covered writing was critical. I'm one of those people who think most people who covered write are in fact naked writers who happen to own the stock, and I think Mike did a real good overview of why you might not want to do that. Nina's doing a second one on the 14th. She's going to talk about gamma as a risk gauge. All the events are free. Come to the site, optionsexpress.com. And there's a whole education center. Please feel free to come in. You don't need a log-on. Educational events are ahead of the log-on.
I always love that. And the more education we can get out there for free without logins and everything else like that, the better it is. Speaking of free education, Uncle Mike, what do you have coming down the pike over there on the RCM webinar train?
The rest of the month of May, we're going to have another couple of events on the 13th and the 20th. Titles to be our TBA right now. We do have our recordings up on the RCM website. So for information on that, same spot where you sign up for the webinars, www.rcmwealthadvisors.com/webinars. So check it out. If you missed some of our past recordings, feel free to come check them out.
All right, listeners, we want to thank all of you for downloading and streaming and subscribing to this program, and of course for making it such a success. And maybe what Alex says will come to pass soon, and we will be rivaling CNBC's numbers there, but that's hopefully soon to come. But in the meantime, of course, keep sending in those questions and comments. We love to hear from you, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.